Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. This is Richard Marco. With us we have, in serious mode over here, Mike Carnevale. This is Conversations with the Long Hill Report. Mike is going to set us right about the economy, or not. Anyway, today is a big day. Yesterday was Liberation Day, and I mentioned to Mike and Director Drew that I thought they meant by Liberation Day that it was when Spartacus Cory Booker stopped talking and we were free from hearing that 25-hour speech. But no, Liberation Day was President Trump saying with all the new tariffs we have, our economy is going to sail. Now, there is a question with that. Mike is sure it's a terrible idea. I'm not sure it is a good idea, but we have to have a little discussion with about tariffs. The 19th century, the only tax was basically the only federal tax we had was the tariff, and we got by with that fairly well. It was a cause of the tariff was a cause of the Civil War. But we could discuss that at another time if anybody wanted to do it, and probably they don't. But in 1930, we passed the Smoot-Hawley tariff. And just at the end of 1929, we had the crash, the Black Friday. According to economist, well, he didn't claim to be an economist, but a writer, Jude Wodinsky, the Smoot-Hawley tariff, tax of tariffs, was the major cause of the Depression. Now, there's some dispute of that, but it was an all-encompassing tax. They tariffed anything they could. For example, they tariffed Italian olive oil. The purpose was to make it come over in bulk so we could bottle it and make some money over here. They did they tried to tariff as much of anything. And the rest of the world said, sorry, no. So a tariff is not something that's just this tax. It can have a worldwide effect. And according to Trump yesterday, I didn't watch it in depth, he was reciprocally tariffing. I think that's fair. Mike doesn't like it at all. You might want to speak to that.
Yeah, well, I mean, I kind of think it's a, it's a tax, really.
We all have tax, really?
Yep.
No, I thought it was, I didn't think it was a tax.
Yes.
You really think it's a tax?
Yeah. And I think,
Not me.
I think you're seeing, I mean, I think you're going to see prices go up. And, Trump's talking about, President's talking about, well, we're going to, if they do this, we're going to do that. And I don't think it's going to last very long. I wouldn't be surprised that a month from now, tariffs, well, what tariffs? I think it's all just a political game, grab headlines, try to force, he'll as soon as one country backs down, he'll declare victory and these things will disappear. Because the effect that I think it will have on the economy won't be beneficial for him when he runs a third term. So I think it's...
Just don't bring that. He's not running. He knows he's not running a third term. He just wanted to get somebody like you to say, oh, third term.
Yeah. Well, I think it's
a Gaza thing, Oh, I'm going to own the Gaza thing. He's not.
No, I agree. But I think it's just the topic of the day. I wouldn't be surprised if in a month from now, tariff-wise, we're back to where we were yesterday rather than where we are today.
I'm going to more or less agree with you in the sense that if there's a tax, well, first of all, when I mentioned the Smoot-Hawley, that was an act of Congress that Hoover signed in. So you couldn't just then the next day say, oh, we're taking this off.
Right.
How Trump, under what law, and I don't know, under what law Trump can manipulate tariffs, I don't know.
I don't know.
But that's Trump all over if he can do it. You're right. If there's a success in Lower Slobovia, if the Trump on the Lower Slobovian auto industry works, he'll keep it on.
Right.
If on the Upper Slobovian auto industry it doesn't work, he'll take it off.
Right.
And that's Trump all over. I think we can agree on that.
Yeah.
But you're okay that we don't make things in this country. You've made that point before.
Yeah.
I agree with you. I think I had mentioned this to you before. You remember Victor Kayyem? He brought Remington.
Right.
60 minutes interviewed him. It was a great interview. Mm-hmm. And he brought all his factories home to Bridgeport, Connecticut. And he said, and I believe this is true, we can't have a country if all we're doing is sitting around selling insurance policies to each other. We got to make something. Mm-hmm. And if Trump can do that, I think that's great.
Oh,
but
yeah.
we can't all just be flipping burgers.
No, but...
And you don't flip burgers, so you're talking from way up there.
Well, no, I mean, I think,
Mr. Privileged.
We're using, we in a sanctum here, we're service-based
They can't do that.
economy.
You can't do that. We're even importing beef.
Yep.
This is the best country in the world to raise beef, and we're importing beef. That's not sane.
Oh, well, because it's cheaper.
It's not cheaper in the long run.
That you don't know. I mean,
yeah.
very few people are focused on the long run. It's all short-term outlook. And, I mean, this will be a good test to see if, what is being proposed actually does.
Wait a minute, this isn't civics class.
No, it'll be a good test.
The people of this country don't need just a test. They need a good economy.
Right, and we will see
happy test day.
Well, we'll see if this brings a good economy.
Okay,
if it really
we're going
is.
to pass out the blue books to Gus, to Mike now.
Bring back,
and
if
Mike
it brings back
all right, Mike,
manufacturing, if it brings back good jobs and whatnot.
Yeah, you're right, it will be a test. We will be at that test.
We will see. I mean, I don't think it will. I think it will just lead to higher costs.
All right, we will. If it's only higher costs,
I think that's what
if we,
I think it will lead
if-
to higher
If
costs.
Joe Smith starts making cars in a factory in East Overshoe,
Mm-hmm.
and you know, we'll probably start thinking that's great. And Trump anyway has to win the hinterlands. He's not going to win in Cambridge.
Right.
So he has, and if he can do that, yeah. It's a test. I'm not sure he can.
Right.
And you're surely not sure. And actually, I think you're hoping he does something.
Oh no, I'm hoping that somebody does something, but I'm not convinced that this is the answer. And I think you take a look at the reaction in the financial market, stock market. I think it's given you the signal that it's not the answer.
The stock market goes up one day, it goes on the deck.
Right.
If next month we come back and it's still tanking, you might be on to something. But if it steadies, how many times have we seen?
Oh
this
yeah.
year?
Oh yeah.
Since you've been talking to me, it's been
Right.
so.
I mean, it goes up and down.
You can
but
take
the
your
trend,
crystal ball.
the
and you
trend,
can-
the trend has been up for
okay,
a very long time.
very long time.
And we'll see. I mean, if this raises costs, that's going to cut earnings, which will definitely cut stock prices.
Maybe some people actually sell more stuff over here. We'll see.
We'll see.
I
Yeah.
would say the odds are you're probably a little more right at the very least.
I just think it could be.
I'm gonna head over to one other thing. For years, it felt like we were talking about Turkey raising its rates
Right.
in reflection to its economy. Here it says Turkey is down to 42.5%. Inflation under 40% for the first time in 2 years.
Yeah.
Do you know what's happening in Turkey now?
Go ahead.
Aha, he doesn't
I
know.
don't know.
There are riots in the street.
Okay.
They're rioting, they're trying to riot out Erdoğan, the president.
Yeah.
He's throwing some people in jail. I think under inflation, everything eventually reduces to its absurd. It's happening here. It's just a lot slower, but not. Eventually, this is going to come up to, that we have at 1 or 2 or 3%. It's still going to happen to us that the country will just go crazy. Not that you think a country that elects Trump is completely sane, but
No, I mean, I think. I think it will eventually happen here, but I don't think anytime soon.
Erdoğan was spending like a drunken sailor on the military. He wanted to make Turkey the Ottoman Empire again. Everything eventually reduces to its absurd. You've heard that from me.
Yep.
All right, we go up to the top now and talk about March.
Usually March is, at least most recently, it's been pretty good. That wasn't the case this year. March usually can be a very volatile month. And the last 4 years, March has been a very good month, but that didn't happen this year. The Dow was down 2%, but that kind of masked what was really happening, because the S&P 500 and the NASDAQ, the over-the-counter market, were down much more than that. And for the first quarter, we're down. In fact, we had the worst first quarter since 2022. Market now is lower today than it was January 1st. And over the last 90 days, there have been no new all-time highs. And if you recall last year, we had 50 or 60 all-time highs. So yeah, things have changed a little bit. first 3 months of this year. Interest rates have gone up a little bit. The long-term bond now is back over 4.5%. And the short-term bonds have really, Treasury anyways, a 13-week one, has really stayed pretty steady at 4.25. So, people who have money in money market funds are pretty happy right now, because most money market funds are based on, the short-term Treasury rate.
And, okay, so you would say a higher short-term Treasury rate reflects uncertainty?
Right, yeah. But the yield curve is positive, which is a good sign.
Which doesn't happen often in this country.
No, but it has been the last couple of months, so that's a positive. And we're heading into historically the best month of the year, April. It's had a tremendous recent history. 16 of the last 20 years, April has been up. So this April, we got some work to do, because
some work to do.
It's down quite a bit.
I'm going out, I'm getting the kit, I'm going to...
Yeah, down quite a bit in the first few days of the...
When people say we got work to do, who's going out and doing the work?
No.
What is the work?
Well, the work is to get something that will cause stock prices to go up.
And how do you work? What is work into doing?
Well, I think you got to, get some positive earnings and positive economic news.
Okay.
And there doesn't seem to be much of that right now.
Okay.
Yeah.
I went out and work, okay. After the show, we'll be taking our picks and shovels and
Working.
we'll be working, folks.
Correct.
And you're going to see we're going to make April
We'll turn it
a
around.
wonderful April.
We're going to turn it around. Technical indicators that we look at, you would think that the big drop in the market these first 3 months, and certainly in March, would help technical indicators. They've helped a little bit, but not a lot. And that can happen from time to time. Sometimes when you get, the technical indicators don't take into effect, political events. So,
That's why they're liked.
Right.
Is Trump doing this? What did...
So the technical indicators, you want to keep an eye on, but maybe not as valuable currently as historically, because you got a lot of political news that's going on that is capturing the headlines. So to say that the sell-off has shown a little improvement in the short-term indicator for the stock market, doesn't read too well for, the market, at least in the next couple of weeks anyways. Again, unless there's some political event that comes out of the blue, which can happen. We've seen it.
Stochastic oscillator backs up.
That's right. Something like that. So I kind of think we're in a period where we haven't been for a while. That's not showing up on any of the economic data yet, but it's too early. I mean, you
This is the first time
want to see how
that
things are.
we've been talking.
Yeah.
This is the first time that you more or less edged away from the technicals as indicators.
Yep. Because I think, if the result of long-term tariffs are higher prices, and then companies will not earn as much money, and then there's no way that stock prices can stay where they are.
This reminds me of who is the guy? He made that famous phrase. It's a big club and you ain't in it.
Mm-hmm.
He was a big comedian for years. He did his show. He called it was that part of the show, the Hippy Dippy Weatherman, where he did.
Oh, George Carlin.
George Carlin.
Yeah.
And we're going to look at the Hippy Dippy weather radar.
Yeah.
And I see there's from northern Wisconsin down to Oklahoma, down to Florida, there's a line of thunderstorms that are the most devastating thunderstorms that have ever been seen in this country's history. They will probably wipe out farms, and associated tornadoes will pick up whole cities. But the hippy-dippy weather report also detects a line of Russian ICBMs coming across their water. So I don't think I'd really sweat the weather report. So the thing is,
Yeah.
what you're basically saying is these are the right now we're looking like what could be Russian ICBMs. The technicals are basically the weather report,
Yeah.
but what you think Trump is doing could be the ICBMs.
Could be.
Okay, could be.
Could be. If they last any length of time.
If they last any
Yeah.
the tariffs themselves.
The tariffs themselves.
What if any tariffs that are working last a length of time?
Oh, then that would be a positive. But I mean, I wouldn't be betting on that.
No. Why am I not surprised?
I think you take a look at like just today with a lot of these companies coming out with where they're manufacturing their products. You know, I mean, if these prices are going to go up, 10 to 20%, then these companies are going to earn a lot less money. And the stock market is based really on a price to earnings, and the price will have to go down a lot. And I don't think people, sounds great, we're going to stick it to the EU, we're going to stick it, but if it drops U.S. corporate profits, people are going to feel it in 401ks and retirements, and longer term the value of their home and whatnot. Because
we make homes overseas?
no, but the value of
The land we're making that over the land the house is on.
Nope. But if you have less money,
To buy a
there's going to
house.
be There's going to be
Okay.
less demand at current prices.
Well, I'm scared about the tariff thing too. I think that an economy should be run, economically it should be run honestly. We should have sane policies. I haven't seen that in this country. Federal Reserve, anything. The constant evaluation of the country's currency. I don't think we can last that. I am scared of tariffs. I certainly hope he's doing something smart. I think he's the type of guy who says when this doesn't work, he doesn't say, this doesn't work, but he quietly will sweep it under the rug. And I hope he does that smartly. But I'm scared. I agree.
Yeah.
But I know you, and anything Trump does, even if it was something you loved, you just don't like him.
I would say
You don't like him.
I want to see somebody, do something. Just do it. Don't talk about it. Stop
Like the Biden administration?
No. I'm not saying that. I'm just saying, the name calling and all of that. Just
I agree with you.
just do it.
I don't.
As opposed to, this drama every single day, which is affecting the average investor, right? Ooh, the tariffs, the market is down 1,500 points. Ooh, I better get out. Oh, okay. Yeah.
We bet that it'd go down to 1,500 points.
Correct. And then, I'll get back in when things look better. That is so damaging to people long term, and that's part of the reason we have a lot of people who aren't in the market, who were in the market, got out right at the lows, and then saw it turn around and go right back up again. I don't think it helps anybody, and I think it's an ego thing, and unfortunately, for the average investor who needs the stock market to
The
gain
average
anything.
investor, how would you?
The average worker needs to be invested.
Is the average worker invested?
Yeah, through their company 401k.
Through the 401.
Right. They need to. They need
and
that.
if you're in the 401, you're not disinvesting. You're going to stay with it.
Yeah, right. But
Who's the person who gets out?
a lot of people reduce the amount that they contribute, or they stop contributing, and saying, "Oh, I looked at my statement last month, and I lost more than I put in. I'm just going to not contribute for a while," and that's time that they'll never get back. And those are the very people that need the market, and get scared out of it. Mm-hmm. And so I think that's a big a disservice, because without investing in your 401k on a long-term basis, it's very difficult to accumulate enough in retirement to live comfortably. And the people who do that are in pretty good shape. Mm. I think that's and days like these tactics or these events that happen, don't do a service to anybody. So you have to do it as I would do, just tune it out completely.
Probably.
Unfortunately, people can't. It's like a car accident. They have to. Well, what's the crazy thing? And it's like I said, it's 50-50. 4 years ago, it was one side saying, "Oh, the crazy this administration." Now it's the other 50% who's saying, "Oh, this crazy." So it's the same percentage of people, just that the names have changed on who's in power, and you just gotta forget about it. You can't, and if you can do that, one of the things is those technical indicators, you'll look at them, can kind of steer you in the direction of expectations, then you can end up with something in the end.
Okay.
But if you
so even though you're saying the nuclear bomb is coming, the line of ICBMs,
mm-hmm.
stay in.
Definitely.
Okay. Well, we're great.
Yep.
All right. Fed meeting, no change.
Right. And they voted again not to make any changes, but the futures market is hinting that they are going to be cutting rates before the summer.
Even with the bombshell today, or yesterday, I mean.
Yeah.
Okay.
As a matter of fact, the odds are increasing. Because if it does raise prices, right, and you do have inflation coming back, and if it stalls the economy, they'll probably have to cut interest rates.
How much will they cut, though? I mean, it's not a quarter point's not going to do it.
Well, the odds are that right now a quarter of a point in June, and then maybe again in September.
Well, if the emergency is the emergency, what's the point?
Right. Or they could, but they don't have to wait to a meeting to cut. They could cut them at any time.
If they don't wait to a meeting and they cut just out of the blue, we'll all know there's trouble.
Right.
No, real trouble.
Mm-hmm.
That's their reaction to it.
Yep.
All right. They said uncertainty around the economic outlook has increased, and cut growth forecast, raise inflation outlook. Right. Oh, we're going on our way to Turkey. All right. Mm-hmm. Interest rate cuts by Canada, European Central Bank, Mexico, Morocco, Switzerland, and Turkey.
Yeah, just about everybody is cutting rates, so that will put pressure on the U.S. to
I'm always watching the Moroccan rate.
Mm-hmm. You wanna, that in Turkey.
Well, yeah. Of course, you're not supposed to call it Turkey anymore, because it's Turkiye.
Oh, okay.
Because calling it Turkey was kind of a turkey.
I'll remember that this November.
All right. The Turkey one, yeah, we already discussed.
Correct.
Turkey. Kazakhstan raised.
Yeah.
Another place I got to look to.
Just threw that in there just to make sure you're reading.
I take that. We'll be pistols at 25 paces after this show. All right. Oil remained in the low 70s. I've heard it's going down?
Yeah, it's down.
I got to get to the pump.
Dropped in the last 2 days.
All right, production.
Production is
increased.
still near a record all-time high.
Okay. Drilling, even though the drilling rates are down.
Right.
And St. Patrick's Day, the holiday, our first trading day after historically the best day in March, with an average gain of 0.3% this year. Well, what is that going to signify? Does that mean if St. Patrick's Day, does that signify we're going to have?
No, it just means that in the month of March, it's an oddity that the best day tends to be St. Patrick's Day or the day
That's
after.
a usual thing?
Yep. And it proved out again this year.
Those Irish just go out there and invest.
And we got some good news with the Red Sox too. Forecasts a really good year for the stock market. They've played Texas in the opening game of a season 4 times, and the market's been up every year, average of 15%, which is something to focus on times like where we are right now, where we seem to be far away from a 15% gain.
Okay. All right, we did a little too much politicking, so we're getting down here. Inflation is better, but it's still up.
It's still up, and again, none of this takes into effect what happened yesterday, so don't know how important that number really is right now. Leading economic indicators weak again. We've now had 2 months in a row down. History shows 3 months, straight months, the odds of a recession increase, and a lot of firms are increasing their recession odds, in the last week or two. Most have it now like 50-50. So we will see.
Okay.
But jobs continue to be, fewer jobs are getting lost and more jobs are being created. So that's still, a positive. Layoffs have continued to be below 250,000 a week. And that's the number that at least historically shows the level that would begin to hurt the economy. The negative is that now that the long-term unemployed is at its highest level in almost 4 years. So that's, again, something that fewer and fewer people are losing their jobs, but fewer and fewer people are finding new jobs. Less and less people are finding new jobs, but still creating. And we saw that with the employment report for February. We created just 151,000 new jobs, although it was the 50th month in a row of a gain, just barely enough to grow the economy. The number there is 150,000 per month, at least historically, is needed to keep the economy moving. So we're at a point where we haven't been in a long time, and I think what happens in the next month or so may set the stage for what's going to happen for this year in the stock market.
Well, we've come to the end of our little discussion here. I don't usually see Mike this morose, so we hope something good happens in the next month, though he's probably a little doubtful, because I hate to see him looking so glum. This has been Richard Morco with Mike Carnevale, Conversations with the Long Hill Report. We hope to see you again next month.